Hey guys, All in Crypto here, and welcome everybody for another YouTube video. Today we've got an important video as tomorrow is going to be a pretty volatile day to both the up and the downside, and likely today leading into tomorrow is going to be quite a volatile time. There's so much going on, and one thing that we try and do in these daily market updates is really capture the sort of cross-market analysis. We really try and do cross-market analysis because it's important. The cryptocurrency market is very much moved in the same way that altcoins are very much moved by Bitcoin, by things happening around it. All the sort of amazing innovations and kind of, revolutionary things that we see take place for the crypto space often don't have much of a bearing on its price. And that's because as an asset class, we're still in this very sort of speculative infancy. We will move away from that, but we're going to focus predominantly on tomorrow's CPI. We've mentioned this, we've shown the forecasts. JPmorgan, for example, are forecasting lower than expected US CPI data on Thursday and stocks higher. So I align with this. This is something we've been calling for, but we have actually said expect volatility going into it, which likely means a slight retracement off of Monday and Tuesday's highs, or down from Monday and Tuesday's highs before we get that print. And even on the print, if you're going to trade this, no leverage, or do what you want, but I wouldn't put any leverage on, and certainly stops often get hit both ways when you're trading the CPI, because you'll often get the news, it will go one way and then it will go another. Ultimately, lower inflation means a less tough Fed. We've spoken and we've actually said that, look, the worst in terms of interest rates is behind us. Markets are already pricing in probably where interest rates are going to go to. So they're kind of on track and markets are forward looking. And actually, we've stated our bias that we're not bears or bulls here. We're kind of neither. We're actually, at this point, and this is stuff I'm discussing on my Patreon in a lot more detail, we're probably more leaning towards upside and continuation. So a rally taking place for the entire cryptocurrency market and markets probably across the board, but certainly the cryptocurrency market specifically, than we are further continuation to the downside. We had FTX, one of the largest crypto exchanges, collapse, and it wasn't really the kind of collapse that I was expecting. So maybe there's strength there, or perhaps just a real lack of trading volume in terms of participants that are interested in trading the crypto space for whatever reason. I think FTX took quite a few of them out. But we will do some technicals on Bitcoin. This is a bullish divergence, and these bullish divergences in a trend that's been as long drawn out as this and as brutal as this mean really one of two things, okay? Either you'll go, and the only way that I see a rally not playing out is if we have some sort of traumatizing event. So our overall thesis is that it's a shit time for the economy. This is the savings rate, just collapsed down to 2.2%, the lowest level ever. Means Americans are running out of money. And last time it was this low was 2006, 2007, right before GFC. Major recession warning, expect a big decline in consumer spending. So this kind of lines in with our yield curve. And we still believe that there is, just like the yield curve's predicting, a real financial crash coming, okay? But when this will be exactly, we're not sure. And the hard thing to do right now is to try and work out, are you just going to sit on the sidelines and wait for that crash to take place, which we all think is inevitable, or are you going to look to come up with a way to hedge all outcomes, which is what I'm trying to do. And I will share it with you guys later on down the line, and actually be able to capture both, be able to benefit no matter what happens. It's my belief that the cryptocurrency market is going to offer the greatest returns out of any market moving forwards. And the reason being is because it's the new technology. Just like, the internet era probably offered you the largest returns previously. And then prior to that, it was the PC revolution. And prior to that, maybe, things like the telecom industry. And then prior to that, so on and so forth. Crypto is that, and it's going to offer, life-changing opportunities for anybody that takes part. So we want to capture that. And we're ultimately looking to be long-term investors in this. So for us to try and time a bottom it's not, it's very hard to get perfectly. I'd rather have multiple chances at it than just one. You guys will know that we were out the market since March, which is round about here, and we've rode all this downside. And in altcoins, we've tripled, quadrupled, doubled, 10x'd our positions in some of them. So if we were to buy back today for the long term, would that make sense? Well, the issue that we have is we still expect a traumatizing event, and we still think the economy is in a real shit state. This is global spending on mobile games falls 5% as higher inflation causes markets to cool off. I would say actually probably it's a lot more likely that what the Fed are doing in terms of interest rate hikes is limiting that. And actually World Bank makes a big cut to its 2023 growth outlook, says Globe is previously closed to recession or perilously close to recession. So markets typically don't bottom in a recession. What's this? Mortgage refinance demand surges as homeowners take advantage of lower interest rates. For now, expecting higher ones. I don't think that interest rates, in my opinion, are going much higher for the United States. I don't think we've got another point coming. Or I think we've got no more than another point coming. And we did a whole study. I believe I did it on YouTube and not just for my members, where we looked at the 2-year government bond yields. And we said if this is topped, well, rates aren't going to go much above 4.8 or they're going to top out round about there. And they're already at 4.1. So I think the worst in terms of interest rate pricing is behind us. And I think if you look at crypto, and we'll get onto the CPI and some expectations in just a second, including Bloomberg and a number of other expectations. I think this trend, when I look at this RSI, and I know people don't like RSIs and lagging indicators, but I personally think the RSI is a very useful one for tracking a trend and looking at its credibility. When you have a divergence in the RSI like this, when you're putting in lower lows and a higher low on the RSI, it means that the trend is running out of somewhat momentum. It means that there's less conviction in the trend. This is the money flow index also showing a similar thing. And we will not bother with the demand index until it may be crossed over here. Demand index on the weekly is really only, it can offer quite a good sell point in regards to following the trend, like if you look at where it crosses. But I will be getting indicator videos out soon. So just focusing on the RSI, which is the important one here, we can show divergences on a number of others. This kind of is leading me to think that actually you're going to get some sort of at least a rally. At most, maybe, and we're not calling a bottom necessarily, this trend could be coming to an end. Okay? Now, I want to take us over to the stock market before we look at this. I also want to note the fact that the dollar, in my opinion, is very much due some sort of a pushback. We're still majority dollars, by the way, guys. We're still stablecoins. We've been in stablecoins for nearly over a year, for coming up to a year now. And we've rode a lot of this upside. It's obviously coming back down. We're happy to hold stables. But the dollar's due a kickback. But what that looks like, I'm not sure. Is that a kickback that then leads to lower, or is that a kickback that then starts something like this? And to bring us onto the stock market, to kind of bring this full circle and also show a bullish divergence that played out in 2000, because you've got a bullish divergence here for the stock market as well, by the way. Okay. And that bullish div may have already played out. But my thoughts is, in terms of this being a trend, this is the first time you've really had this. The early warning signs were maybe here, and then you didn't go much lower. But then we've also said, and we've speculated, that actually we're kind of very much following 2008's roadmap. And this also ties in, this is your bullish div here. Lower lows on the price, lower highs on the price is 2008 we're looking at. And then you get this rally, but then the sort of macro condition takes a real shitstorm. And of course, we end up in the 2008 financial crisis. And this, of course, was the Lehman's moment. We can't rule that out for the stock market where it currently is. And our market wouldn't escape that. So this is probably the trickiest time to work out as an investor what you want to do, in my opinion. What are you going to do? Are you going to sit on the sidelines and you're going to wait for disaster? Or are you going to try and come up with a strategy that may enable you to be hedged in both directions, which I think I'm personally onto, if that makes sense. We can't rule out the realms that this may take place. Now, this, of course, is obviously prior March 2020's lockdowns, thus the printathon. And we have speculated that you could potentially come back down here. In fact, if you look at many stocks out there, remember this is the S&P, so this is an index. Some of them have somewhat already done that. Amazon, for example, this is March 2020, is in that March 2020 dip and actually put a toe below the lockdown lows. Okay. Of course, we've got things like Apple, which aren't there and are still very elevated. Maybe they have further to come down. We've got things like Meta, which are well and truly below it. We're not going to look at GameStop. Tesla, this is March 2020's lows. So is there still that further downside? For me, Tesla's made a target here. Is it going to set up some sort of a head and shoulders and then see that continuation maybe on the back end of bad news? But I still think there's relief coming. So to bring everything full circle, I think Bitcoin, where I'm currently sat at, this doesn't have to be the end of this downtrend in this bear market, but I do think there's going to be one thing that I'm seeing is this trend is having a lot less conviction to it. And that, as an investor, makes me think that is now or is it not a good time to be putting my toes back into the market, having sat out and mitigated and avoided a lot of the damage that took place last year. Now, I'm not going to give you the answer on this video. I will do later on, because maybe it isn't. We're still waiting for this demand destructive event. If we still think the economy is in a shit state and that's going to draw liquidity out of everything and interest rates are going to stay higher for longer and continue to burden liquidity, then how and why would we put money in if we expect things to go lower down the line? It's not an easy game, and people that tell you that it is don't know what they're talking about. But what we're trying to do on this channel is think about it all, give you guys those thoughts, and let you make your own mind up. Remember personal savings rates. You got to think, if this was the end of the bear market, well, are we going to have a sustained bull market in a recession? Are we going to have a sustained bull market at a time when people are generally broke? On the other hand, though, there's a record amount of cash in bank accounts. Of course, the money supply is significantly bigger to whenever they've looked at this metric. And we looked at this, remember, guys? Get this on log. Looking at this trend line for US DT, which is stablecoin dominance, and we said, okay, a little bit toppy. What else do you have? Bullish div. Maybe this is going to start pouring back into the market somewhat, and you're going to see dominance go against it. So, am I calling for the big cryptocurrency market to rally? Well, let's update you on this once we've had the CPI. Expect volatility. You're going to get hedging today, so you're going to get people basically hedging their bets. And if they've got shorts, taking potentially longs out, and if they've got longs, taking shorts out and looking to hedge whatever comes tomorrow. But as it looks right now, the forecast in the consensus is 6.5. The TE forecast is 6.7. Of course, the prior one was 7.1. This is from JPmorgan. JPmorgan are forecasting lower than expected US CPI data on Thursday and stocks higher. JPmorgan, picked via Bloomberg Gate, reports outline their expectation range and attaches probabilities for the US CPI. So they always do this. JPmorgan are pretty good at doing this. This is the JPmorgan's game plan on CPI day. The bank's trading desk, so below 6.4, probability is 20%. They're saying the S&P is going to be up 3 to 3.5%. 6.4 to 6.6, which is right around consensus. They're saying there's a 65% chance, 1.5 to 2.5%. Above 6.6, they expect it to be down 2.5 to 2.3. So that's certainly interesting. And we will see. But if you do look at commodity prices, this is the thing as well. Look at the dollar today. Dollar's been getting smashed. So we're expecting a resurgence of this. Does that mean that the stocks and crypto go down? Thus far, the correlation is yes. But talking about commodity prices, this is oil. These are kind of pre-war levels. Of course, to put things totally into context, March 2020, you're still massively elevated. but it's coming down, and this is what the Fed wants to see. You know, this, of course, is March 2020. We've mentioned someone that called this short all the way down before it was even a thing. You're still very elevated. Wheat is what we looked at. Natural gas is one. This, of course, is pre-war. But since March 2020, you know, you're still massively, massively elevated. So inflation is still here. It's still a problem, but it's less so of a problem than it once was. And is this now a trend that's leading towards continuation to the downside? Potentially. And does that mean that our rate hike's coming to an end and the sort of hawkish Fed is coming to an end? Likely. But at the same time, we've still got the sort of macro environment, the economic environment, which is a shit one. And we've also got this sort of yield curve demand destructive event that we've got to watch out for. That's very hard to predict, but is almost a given if you ask me at this point. So good luck out there. We will be doing an up-to-date on at my personal position, but you guys are going to get that later on. But now's the time you want to be thinking about all this, weighing up the risk to reward. Don't ever look at an altcoin or crypto and say it's 75% down. It's only got 25% to go. Or, you know, for example, don't look at a coin that's 90% down and say it's only got 10% to go. If a coin's 99% down, it can still go another 99% down. Go 100% down if it goes to zero. So don't use that as a metric for saying things are valued. Look at everything around you and come up with your own analysis. My personal take is that this trend, providing that there isn't a demand destructive event, which looks likely, and then this RSI rolls over, take this seriously. That's what I'm going to love and leave you on, guys. And we're going to see what tomorrow's CPI is. Remember, the expectations are, the consensus is 6.5, TE's forecast is 6.7, and we gave you JPmorgan's scenarios. All I've got for you in this video, guys. If you enjoyed the content, like, always appreciate it. So as a comment, and I'll see you all in the next YouTube video. Thanks a lot for watching, ladies and gents.